This morning at CNBC's Delivering Alpha conference, I got a chance to sit down with Nelson Peltz and Bill Ackman, two very big-name investors. And one of the things we talked about was the concept of platform companies, also known as special purpose acquisition companies, or SPACs, as a way of creating real value. Basically, a SPAC starts as a big pile of money, then they grow by making a series of acquisitions. Take Platform Specialty Products, PAH, the specialty chemical roll-up, which Ackman happens to have a gigantic 20% plus stake in. Platform was created just a couple of years ago, but since then they bought a bunch of deals. Most recently, they announced that they're buying Alent. This is a British specialty chemical maker for $2.3 billion in cash and stock earlier this week. Now, you might remember that when we had Platform CEO Dan Levere on, it was back in March, he made a bold call saying that his stock, which was trading $26 at the time, could only be worth $200 someday. Since then, Platform's basically flat, but I'm a big believer in the management team. And we know that Bill Ackman has had a lot of success with these special purpose acquisition companies. Let's take a closer look with Dan Levere, the CEO of Platform Specialty Products, learn more about his company and where his prospects. Dan, welcome back to Mad Money.
Nice to be with you.
Have a seat. All right, Dan. Now, this acquisition is one of many, and I think I want to put it first in context. A lot of our viewers have made a lot of money in Valiant, ton of money in Allergan, which was activist. You're kind of that for chemicals.
Very much like that, Jim.
And that means that we should expect many more acquisitions, that this is a way to be able to build this company up big.
Yes. We believe putting together really high-quality cash flow-oriented businesses in one platform really makes sense.
All right. Now, this acquisition this week, I was very grateful for it because I'm worried about DuPont, which has too much ag right now. Now, you can't ag long-term. You probably can't get too much of it. This brings a better balance to your company, this acquisition, right?
A much better balance. Yeah, pro forma, about 50% of the revenues will be in ag, 50% will be in the traditional specialty chemical side.
Is that still too much in ag? Should we expect another deal soon?
I wouldn't say so much as too much in ag, but we would love more balance. And we'd love to, our strategy is to be a high cash flow specialty chemical business that's broadly diversified.
Right. Is there always enough for sale? I mean, and the reason I mention this is because, DuPont spun off Chemours, and that's TiO2, where the prices are plummeting. Mm-hmm. But are there really always enough of the targets around?
There's hundreds of billions of dollars of assets out there that fit our business model, hundreds of billions.
Hundreds of billions? What, because of assembly materials to surface chemistry? I mean,
to coatings, to water treatment. I mean, there's a broad cross-section of industries that we can play in. There's literally as many as 100 billion per new vertical that we're interested in.
So, I mean, I see that you talking about flavors and fragrances, cleaning solutions, oil field services. These are all areas that you intend to be in.
These are all areas that we have targeted that have the financial characteristics, which is high cash flow with defensible moats that will drive shareholder value over time. So all these areas share those characteristics.
No, this last acquisition, you're getting a lot of tech. I mean, what happens if tech slows down? You still okay?
No, this is, whereas it has a technology component to it in printed circuit boards,
right.
It's not really what you think of as a tech business because we are broadly after the whole electronic supply chain. So all types of electronics, automotive electronics, consumer electronics. So I wouldn't really call it a tech.
No, but who are you going up against when you start? Because you're starting to go up against some companies that are pretty famous in the business. Ag obviously, but now this business is there's some specialized guys in it, right?
Sure. Well, I mean the big players are Total, the French oil company, has a division called Atotech. They're the giant in this market. And Dow has a big business in this area as well. So, yeah, we're up against some big guys. But we've been up against big guys before. We know how to do that.
All right. Now, you famously said the $200 target, and it came at the end. And I realized sometimes it's TV. I couldn't just say, how did you get that? But give our viewers a sense about why that is not necessarily pie in the sky.
Well, we don't think it's pie in the sky at all. Now, I want to make really, really clear it's a target. It's not a prediction.
Oh, no, right.
There's a big difference between a target and a prediction. But we've looked at value creation in lots of different ways. There's a famous book called The Outsiders that is out there that goes through a series of value creators and capital allocators and how they've generated value. And we've run a whole series of different models. We believe we can get there over time. We really do.
And you're friends with Martin Franklin.
Martin Franklin's my chairman and partner.
Now, Martin Franklin did it. I remember when I met him, he said, I'm going to build a he did that kind of the target. And it was like, a couple of coffee brands, a couple of machine appliances. It really is that again, right?
In a lot of ways. I mean, think back, if you go back far enough, my father bought McDermott from the original founder. It had $8 million in market cap. Right. Today, it's $8 billion in market cap. What's the future? Who knows?
Well, I'll tell you, I'm a believer, and I know Bill Ackman would make anyone a believer who watched this morning in Delivering Alpha, and I think you got it. I really do. I really do think you got it. It's Dave Lever. And he's the CEO of Platform Specialty Products. Now, write this down. It's PAH. It's a relatively new company, okay? And it was up almost 2% today, so be careful because we talked about it. But I think it's got very long-term great prospects. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.